But when you get to more than that, it means it's kind of a regulatory encroachment. It's so much friction, it's crippling you. If you want the industry to come to life, you need to take the regulators off the critical path of issuing assets. You can't file to tokenize your Picasso and wait for 3 months. And you go to jail because you committed criminal fraud. All that stuff just needs to happen, right, in a rational fashion. It needs to happen a million times faster. So that's the idea of a practical framework to do this.
Hey guys, welcome to Everyday Finance. Back in the spotlight. Michael Saylor is pushing the envelope with his plans for the initial public offering IPO of STRC's Bitcoin-backed shares. What is the next step? Creating a connection between stock and Bitcoin reserves is a daring combination of traditional finance and cryptocurrency technology. Saylor is expanding the narrative surrounding Bitcoin as a treasury asset. And this initial public offering IPO has the potential to serve as a model for future public offers. It is not simply a matter of going public. Rather, it is a matter of reconsidering capital structure through the perspectives of Bitcoin.
Well, I think there's about 40 to 50,000 publicly traded companies in the world. There's 4,000 in the U.S. But that really understates the problem. Because of the 4,000 in the U.S., there's only about 400 or so that are well-known seasoned issuers. So that means there's 400 companies, maybe 600, that can file a registration statement and sell securities the next day or within a couple of days without waiting for approval from the SEC or from a regulator. On the other hand, there's 400 million businesses that can express an opinion or create a product or improve a product. So if you look at the economy for products and services, it's evolving at a very rapid rate. But if you look at the economy in the capital markets and you look at the rate at which we can develop capital assets, they're crippled and evolving at a very slow rate. If I want to do something as simple as maybe I want to tokenize a Picasso painting. Well, you own the painting, it's worth 10 million bucks, and you want to sell 100 shares of it, and you'd like to float that, on an exchange. There's a global market for it. People would like to own it, but it would cost you $40 million to take a company public and $10 million a year. So you see, at some point, it just, you can't capitalize, you can't legally, practically tokenize an asset that isn't $1 billion asset. So what we've done is we've capped the market such that if you're not running $1 billion to $1 trillion enterprise, the capital markets don't work for you, right? And the crypto economy, the crypto markets, they've tried to overcome that. And they've issued millions and millions of crypto assets, but they haven't been legitimate. They've been deemed illegitimate, and that's why we've had the war on crypto. And so this framework would allow us to create legitimate digital assets. And the way you'll know it worked is you can actually tokenize a $10,000 asset, $100,000, $1 million, $10 million, $100 million, $1 billion, $10 billion. It's hard to defend the status quo, even because, there are examples of successful companies that are monsters, but they would have been successful despite regressive regulation. I would argue that Apple stock would be more valuable if it was tokenized and it could travel to any iPhone or any Android phone anywhere in the world on Saturday afternoon. People would find it to be better collateral than it is right now. There would be a lot of innovations. My point is, it's not practical to issue an asset if it costs more than 10 basis points a year to stay compliant. And you can pull that number by looking at the ETF industry, and you'll see that any democratized asset issued by BlackRock, or look at like SPY or others, when they get to more than 10 to 20 basis points, they get crippled. You can spend 10 basis points 10 basis points means that over a decade, you give up 1% in order to stay compliant. But when you get to more than that, it means it's kind of a regulatory encroachment. It's so much friction, it's crippling you. If you want the industry to come to life, you need to take the regulators off the critical path of issuing assets. You can't file to tokenize your Picasso and wait for 3 months. The case is worse than that, Balaji. It's like I said 3 months. But the truth is, if you wanted to actually tokenize an asset legitimately in the United States, it would be 3 years of work. It's 3 years of work, $30 to $40 million of accounting and lawyering. Then it would be 3 months of filing the paperwork. Then it would be $10 million a year to stay compliant. So if you think about everything else in our world, think about the entire innovation economy. If it took you 3 years to publish a webcast, if it took you 3 years to come up with a new idea, right? It just takes too long. And so, and the answer is, it's like, imagine if it took you 3 months to get permission to drive your car out of your driveway to go across the city, right? Or it took you 3 months to get permission to put food in your mouth. Or to breathe, right? It's just ridiculous. But that is the problem we have today. And the answer, of course, in an enlightened society is, if you drive your car out of your driveway and you run over a bunch of school kids because you're speeding and drunk, you have criminal liability and civil liability for operating the vehicle in an unsafe fashion. So what we ought to do, and we do the same thing with like posting things, and we do the same thing in every part of our economy that works. We let people think for themselves and innovate and create and find a customer, and then they're civilly and criminally liable for their actions. And so here, what we need to do is just take the regulators off the critical path. We need to have a set of data structures. The industry will create a set of services. And then if you have 100 Picassos and you want to tokenize all 100 of them, you take the photo, you post the certificate of ownership, you upload it, you publish it, you offer it to the public, the market forms, maybe the IPO fails, maybe they succeed, maybe you sell the thing and you're a cheating criminal, and then someone sues you and you go to jail because you committed criminal fraud. All that stuff just needs to happen, right, in a rational fashion. It needs to happen a million times faster. So that's the idea of a practical framework to do this.
In spite of the fact that it is less than $120,000, Bitcoin is not decreasing. Rather, it is increasing. Although price action has tightened since reaching an all-time high near $123,000, fundamentals have not trembled in response to this development. The on-kind data from Bitcoin Vector and Swiss Block indicates that the network is growing in a healthy manner, that liquidity is good, and that the holding base is resilient. There are no huge top indications coming from CoinGlass, nor are there any short-term holders who are still active. The structure has not been altered. According to the analysts, a possible breakout to $138,000 is on the horizon. Do you translate? The conclusion is not yet here. This is merely the wind up.
Let's take eBay, right? What we really want is a marketplace to form like eBay, where you didn't need to get government permission and wait for 3 months in order to list, your comic book collection on eBay. But at some point, the sellers have a reputation, or the issuers in that case have a reputation, but eBay had an interest. And over time, the free market kind of figured out how to figure out who to trust, who not to trust, and how to take risk and how to clear the market. So, you would think that a digital exchange like Coinbase or Binance will start to apply, AI and modern techniques to figure out whether someone's getting ripped off or not getting ripped off, and over time, people will work it out. But what's clear is That's why I think we wouldn't have 1,500 exchanges. You might all of a sudden see Apple and Google and Meta get into the business, and Microsoft, and you might see all the banks, and you might see lots of Wall Street firms and hedge funds, and then you've got the natural short sellers and the natural arbitrageurs. And in a world like that, there's a lot of people that will write a computer program that sifts through 10 million things at the speed of the computer, and they form an opinion about whether it's a good thing or a bad thing, and they short it or they go long it, and just let the market cook, right? The key point here is the market just doesn't work if there's a regulator on the critical path, so they need to publish some standards and guidelines, get out of the way, and then you will actually have a practical path to compliance, and then you can empower innovation. And then, what you're getting is exponential improvements. You're going to get exponential improvements in cost and speed and accessibility. Just like what's happening with all these AIs right now. You're looking at these things and they're changing every week. Right. And on the other hand, Balaji, I can legitimately tell you that I came public in 1998. I lived through 99.87, maybe 99.9% downturn there and back again.
Wow.
But here's the point I'm going to make. I haven't seen an innovation in the way that my stock trades on NASDAQ since we came public. Not one. It trades the same way. It's literally the same thing for 26 years. Maybe I would just say you ought to have the option to have the benefits of full custody, which is you own it. It's a bearer instrument. It's tokenized on your handheld. Or if you're willing to loan your assets out to a bank and let them rehypothecate it, you ought to have a choice of 1,000 different banks. And maybe there's someone in Singapore that'll give you a better deal than the bank in New York City, or somebody in London or Paris, or fill in the blank. And, granted, maybe they're untrustworthy counterparties and they're going to rug pull you. But the real point is people ought to have the freedom to own their own assets or trade their assets or custody their assets. And the marketplace ought to be able to form capital markets. Maybe it's not, maybe it's I'll give you a loan against it. Maybe it's I'll give you interest on it, but maybe it's something different. Maybe it's I'll form a derivatives market. Like, for example, if I can tokenize a bunch of old masters' art, then maybe someone else can create a derivative of old masters' arts and sell me futures on it, right? And that market comes to life when you're able to pool $1 billion of liquidity on a global basis. And that market, and by the way, when you publish it and you trade it 24/7, but when you have an illiquid pool in a dark market with someone with a monopoly on it, one of the problems is you've got one bank in Kansas and they're the market maker on real estate in Kansas, and they set the price, they set the bid ask. And no one else gets to enter that market. No one else has transparency. And so instead of them giving you the highest common denominator, they're the lowest common denominator. And there's a pretty big difference in the way the markets function when everything is up for bid to everyone all the time in real time with transparency. And that's a world where everybody just gets treated better.
Goldbug and long-standing critic of Bitcoin, Peter Schiff, has acknowledged that he owns Bitcoin, which is a turn of events that no one expected happening. According to him, technically, this is possible since donors have provided a strategic reserve. Arkham Intel has estimated that his holdings amount to 0.0564 BTC, which is equivalent to around $6,670. Additionally, he has a total of $12.9 thousand in other digital assets, including unconventional altcoins such as Sloth and Bucoin. However, Schiff's wallet paints a different narrative, despite the fact that he continues to criticize cryptocurrency. Is it ironic? Unquestionably. On the other hand, it also provides a clue of a gradual shift, which even doubters are unable to completely sidestep the gravity of Bitcoin.